Good evening, all. Ira Epstein, and here we are with your SPDR ETF stock market wrap-up. And this is for July 11th, 2023, just after 6:05 p.m. Central Time. Want to thank everybody that wrote and wished me the best for my family member. Well appreciated. All right. So when we take a look at tomorrow, we have the CPI number, PPI number coming in on Thursday, unemployment claims again as well. Those are the numbers that I'll be focusing on, PCE, things of that nature. So we have another event taking place. You've got to pay attention to QQQ. There's going to be a rebalancing that happens on the 24th of this month. What happens is within the charter as to how this is all set up, you go in and if certain stocks are influencing that index too much, they rebalance. They take certain weightings away and give them to another weight of doing it. Does it affect the stock and the price? To a degree, it could. It generally is thought that it doesn't, but for the index, it certainly changes the weighting and the influence of which stocks. These are the 7 stocks that make up the tech sector. What's carrying the weight of the day. So be aware of that because it will make a change in some of the volatility that's going to take place through that. So what about the CPI? Well, the number we all should look at is the core CPI that came out at 5.3%. I've seen estimates 5.1, 5.2, up to 5.3, no change. Those are the 3 numbers that I've seen that are popular. I think you got to wait and see what does it do. The Fed's going to go, I think, regardless of what this report shows, unless it came in crash. I mean, 4.5, some crazy number, which I don't see. But barring that, I think the Fed is locked in and baking in, and I think the market understands it, a 25 basis point hike. But as usual, the naysayers will go, it doesn't matter. This market's going higher, and it's going to keep going. And the committed bears that look terrible, think of the guys from Bank of America, Mike Wilson, how bearish he has been consistently through this, and the heat that they're taking. They give you their fundamental reasons, you listen, and they're intelligent reasons. They're just not working. The market is being overrun by the fact that the market just thinks stocks are the place to be. The Fed is coming to the end of the hike. We're going to see a very not deep recession as the common thinking. I see people calling for a much bigger recession than is the popular school of thought. The other thing that's starting to happen is the meme boys are coming out. Remember, they would buy AMC, GameStop, anything. They look for things that are undervalued, and when markets get this frothy, they step in and they start driving things. We'll start hearing about them, I think, pretty soon now. Hyatt. I haven't talked about Hyatt hotels, and I decided that, hey, I had one of my friends, Gary Wright, who wanted me to do airlines. I go, nah, I've done the airlines. Don't want to do the airlines. But what about the hotels? Because they have been going sideways. And we've recently had a big pop in Hyatt. I could have done Marriott, but I said, let's take a look at Hyatt. Also, the governor of Illinois, he's part of the family that is the Pritzker family that runs Hyatt. Higher lows, higher highs, bullish. The market fought a battle at the 18-week and the 100. Did I say week? I meant day. 18-day and 100-day moving average of closes. And when it finally cleared right here, this 115.20 area, it just gave itself a big pop. It was enough to carry the market through all this. So these are really new highs for the move. Now, I was looking to see how did NASCAR do for Chicago. And some people think NASCAR was a failure for Chicago. I've read that. The vendors didn't make money. 2 concerts got rained out and all through there. Yet we're setting a record for hotel stays and tourism in Chicago, the killing capital of America. I live here. I am saying that. I am so not proud of what I am saying. I'm embarrassed by it. But think about that. It's just such a gorgeous city that in spite of all that, the tourists are flocking in. And yes, we are setting records for the hotel industry here. That's pretty impressive. When I look at what the market's got, here's the resistance. Each time you've come up to the Bollinger Band, and people fight this all the time, I teach you how not to in my enhanced Bollinger Band course, IraEpstein.com, under education. Go take the course. higher lows, higher highs. No, this is where you're coming out, not going in. And on pullbacks is where you're looking for the support, at least the way that I would teach you to chart. You're overbought, you hit that number, and there's not a very good history of popping up from there. The market pulls back and then it can go again. It has to get away from being overbought in that number. Rivian, it's going to pay a price. I mean, this runaway price from this breakout of 15 to 26 has been dramatic, to say the least. I am so proud that I covered it, and I said I really like this. And as it turned out, it really ran to the upside. Now, the way it did it was not a setup to get long on a daily chart. You had a higher high, lower low. When you finally left this, do me a favor. Go back and look at what I said. I said, when you get patterns like this, big moves come out of them. The question is, how do you catch it? And it didn't allow you. It popped and it just kept running. I think you've reached the point now where the profit taking is hitting in distribution, and I'm expecting the choppiness. I think the straight up run, I want to go on record, as I thought it was going to eventually move out of this and up. I gave you all the reasons. Now I think the market's in trouble up here. Not bearish. I think correction time's waiting for you. In UGA, the gasoline, I didn't see this last rally coming. I was right not to buy it for July 4th, and it didn't go anywhere. It's this pop that just took place that surprised me. Okay. Has there been a sell signal? None. The market has basically stayed over the 18-day average of closes since literally the beginning of July. I just didn't think it was going to run for the 4th, and it didn't. The chart action didn't look like that, and now you're up to the upper band. There's a theme here. We're up to the Bollinger Band, the top in many, many markets. We've had a run up again. This is where Ira thinks money should come off the table. You're not embedded. You're at those numbers. You normally get corrections from them. Just take a look. Another one here. Now, NVIDIA has been going sideways. This is the consolidation phase. How far it wants to go sideways before a price break or a rally, that's the big question. If you're in it, you may not want to let the market break too much on you. If you're not in it, I'm waiting for reasons to see a pop of some type. Here's what's happening. Notice how you're narrowing in the band. They're no longer this wide. Think of the Rivian. The narrower you get these things, look at this. Look at how narrow it was for a long period of time. If and when you break out, you get a son of a gun because it's like a spring in a pipe. You keep winding it, and eventually it comes out. Does it have to go up? It could have been down, but the fundamentals are bullish. Why would it go down? So that's my thinking. And as NVIDIA's run out of momentum, so is SOX. It's just going sideways at the 18-day average. It's okay. I don't see bearish events here. You could get corrections. I don't see out-and-out bearish events. They could come, but I'm not seeing them just yet. In the home builders, think of what you did. You got up to the upper Bollinger Band, and let me teach you here for just a second. When you lose a Bollinger Band, when you lose a slow stochastic that's embedded, and my numbers will look different than yours, my slow stochastic. I changed the formula, and my subscribers can use our charting software. If you're on TradingView, and if you go to our website under Client Resources, you'll see the name TradingView. Give it a click. You can sign up, and we'll give you the suite you can put in. There'll be the swing line. You'll get the slow stochastics the way I use them. Outside days will light up too. But as you can see here, you're running at that number, fighting. Then you lose the reading. Often you go to the 18-day average to regroup and decide, am I going to be bullish? Am I going to get bearish? That's what it did. You work off the overbought condition, which you've now done, and the market is now saying, okay, what should I do next? And over the past few days, the market has again run up, but it's overbought. It's not embedded. I think the pros are going to take some money off the table here. Obviously, you're going up in a big way, saying to the Fed, I know you're raising interest rates. You're not going to hurt the home builders. Okay. Energy. What do we got? We're at the upper Bollinger Band. First time. Last time you did this without being embedded, you got corrections. I'm pointing out something here. This is not a go short area in anything I'm saying there. There is a huge difference between taking money off the table and going short. I'm not saying to go short. Trends are up. In the gold, it is now hoping that the dollar can continue down so it can come alive. As long as the market doesn't get back under 178.26, we've opened the door up for the resistance at the 100-day average at 180.87. In the silver market, the market is rolling with prices trying to get up and stay over the 18-day average of 21.13. The resistance is very tight here at 21.46. Go up a little more, you're already overbought, so it's hard for me to tell anybody, hey, this is a good buy. I'm not saying that. It's not a sale, but it's not a good buy. Copper, battleground, crystal clear. 100-day average, 18. You tell me you didn't come there, you're fighting it, you're doing it again right now. It's counting on China to do something big, and so far China hasn't. China did yesterday say to those in the property game and the lenders of them, we're going to give you another year to pay down debt. You will not take that debt, and they're saying this to the lenders, and make it a bad debt on your books. We will work with them on interest rates to help them. But that's to the lenders to try to keep them alive. That's not going to get things going. To get them going, you got to get the consumer reason. And he's scared there. He's watching deflation. He's not watching property values go up. If anything, there's too many things. And he's not anxious to buy. Problems. Everybody's gotten burns recently in real estate there. Remember all the people that were just buying second and third homes? They had to shut that down. Now your primary home's a problem for you. In BND, lower highs, lower lows, very oversold, spot to cover shorts. Dollar index, I am a long-term bear now in that camp in the dollar, not on the charts from a fundamental point of view. Would I trade the dollar off my fundamental thinking or a chart? If you even think that I would do it off my fundamental thinking, you don't know me at all. I would do it off this, but I think you're making a peak in this market. I said that before, and I continue to say that. I think the Fed is very close, and I was the guy saying they'll just keep going. I think they're very close to where they're going to have the ability to really go into a pause, and if the economy starts to roll, to start thinking, not now, not this year, sometime next year, maybe they got to cushion the roll, cutting rates at some point. You're not there. But I'm thinking that you're coming to the end of the rate hikes, okay? Could there be a surprise? Yeah. Is there a reason to be short with a higher high and lower low? There isn't. And last, if I'm bearish that, I'm bullish on the euro. And you're overbought. Maybe you get to the band, upper band, but nothing that I think goes crazy right there. Tomorrow, as I said, is going to be a really important day for you. You want to see everything that's going to come out. The PPI, if you're a grain trader, you're going to want to see what's going on in the grain reports tomorrow. They're going to be important. You're going to want to see the PPI report Thursday. You want to get a better understanding of this repricing of the NASDAQ. We will cover all these things in our reports. A lot going on in energy, if you're watching how that's come alive again. So how do you keep up? Because everything you see behind me, there's ETFs on. All right, just about everything. I don't know that the meats have one, but just about everything. So how do you get this information and keep up? It's simple. You go to our website under the word free reports, far left, just free offerings is really what it is. Sign up for the ones you want. We'll give you 2 weeks access so you can see what we're doing. Take the price counts if they're there for you. You're going to love them. They're very different. You get a chart a day, and it gives you an idea if a market's in a move, where it might end up going. It is not a signal that says buy here or sell there. It tells you the objectives, and they're high probability objectives, especially the first one. They fall off after that, as you would assume. But we explain it. We have ways for you to put it on our charts and how you work with it and so on and so forth. We keep it proprietary to our charts. How do you get it? All this, go to iraepstein.com, free offers when you're there. Move your cursor to the top here, give it a click, and away you go with that. I'm Ira. You have yourselves a great day. I'll catch you first thing in the morning, and I can't wait to see the CPI numbers, and I'll cover that in the morning SPDR ETF video because I'll have done the futures first, and I'll catch the report for that and what I think about it at that part. You have a good day.